Hey everybody, this is Dow Jones Dave, your good buddy, and this is my week ending report for September 29th, 2023, that would be last week. I'm a little bit late because I didn't get Nike's operating earnings until today, and I was trading, didn't have time to do the report, to tell you the truth. So let's look at what we have here. Let me hopefully you could see my cursor here. Let's change it to why can't I get a brush? There we go. There, that works better. A little bit fat. Okay, so hopefully you can see my little dot there. Let's make it a little bit fatter. There. It's just futures up here, and I use this to calculate the intraday barometer, which is at 121. My God, that's so high. And the market dropped 456 points last week, and the barometer went up 10 points. So it definitely means there's going to be a meltdown, but I don't think yet. I actually am long right now on my positions, and I'll go over that in a little bit. But first, let's look at this. There were no dividends. Earnings rose from 1467 to 1474, but that's net. And we see that the year ago earnings are continuing to decline. That's going to continue because we know that down here, if the rest of the weeks I have, we're shown here, we have a bottom of 1404. So we know that this is going to end up down at 1404, and that will make for easier comparisons. This is one of the things when I said the market melts down into improving conditions. So we're going to have easier comparisons and the market is melting down. With that said, there's some pretty serious pressures on the market right now. But how serious are they? We'll get into that. Operating earnings and estimate revisions, I had to revise this upward, and I had an error in there, and I can actually explain it pretty easily on the Nike report because it involves factors that led to the error. So this is the proper 52 weeks operating earnings. You notice it's higher than I had it before, which was like 1774, 1723, something like that. It's also much higher than the current 12-month net, which means there was a heavy charges being taken. I don't know, 450 plus points of charges. That would be extraordinary gains or losses. In this case, it would be losses and hopefully non-recurring. Operating earnings are business-generated earnings. 12-month net earnings are extraordinary gains like sale of a property, legal expenses, something like that, right? So, estimate revisions were down again this week, pretty heavy for the year after and this year. First time we've seen a heavy reduction of the year after, and for most companies that's going to be 2025. For some, it won't be because, like, for instance, Nike's fiscal year ends in May. So they just reported their first quarter for the fiscal year. That's why I use this year, next year, and the year after, because in the average, this just jumped to a 3-year growth rate. Now it's down to 2.75, which is factored into my estimated growth rate here. So Nike went up this week, green. The growth to PE is not good, too low, not enough growth, too much PE. See that? It's over 2 times the PE, even for a blue chip stock. That is not a favorable valuation for a buy. Now, 52-week net EPS for the last 4 quarters, ending the previous quarter was $3.23. They managed to bump it up a penny for the last 4 quarters in the current quarter to $3.24. But as we know from the fact that quarterly year-over-year growth of operating earnings was minus 5.37%, so Nike had a gain, some extraordinary non-recurring gain to push their earnings up that. Revenue increased 4.83%. Obviously not enough to make money. So their fiscal year ended May, and the last fiscal year was $377. The 52-week operating earnings are unchanged at $377. And you might ask, how can the year-over-year quarterly operating earnings decline by 5%, and the 52-week number is the same? It didn't change, even though it should have. And the reason is there are fewer shares. So they bought back shares, and just enough to negate their quarterly operating earnings decline. And since these are calculated on a per share basis, that brought the earnings up, divided by fewer shares, and which negated this 5.37% decline on the 52 weeks. This year's estimates were raised. Next year and year after were dropped. And so that's Nike in a nutshell. And this is an example, by the way, of premium reports that I am eventually going to put together. I have all this for all 30 of the Dow stocks. Some of these haven't been filled in yet. It's it's a big job keeping all this updated, and I'll just update these when they pay their next dividend. So, at any rate, that's the fundamental picture. Earnings declining a year ago, earnings increasing, improving, net on a net basis, in the current, setting up easier comparisons. And you see the negative growth rate reduced from 15.8% to 15.7%. Dividend growth was unchanged. Well, because there were no dividends paid. So, yeah. Now let's get to the technicals. Oh, hello, guy. He looks like such a college kid. First of all, here's the S&P. We'll go through my day. My day was I bought calls on the open based on this bottom here, and I figured this was the retest, but boy, was I wrong. And anyway, I bought more contracts here. I bought 4 here, 2 here, and then at 42.62, I bought 2 more. And then I took my nap. Had dreams of the market crashing and woke up and it was all up and I'm all great, yeah. So I'm actually up on the day. I also have calls on Ford, and this is just my Elliott wave notation. The reason this is extended is it didn't come back to the trend line. It's not the same magnitude as the other rallies and declines, so it's an extension wave. I'm expecting a break of this trend and go up. And I also have a small call on SLV, which is getting killed. And fortunately, it's only 1 contract out of 11. So the effect on the account, although it's not nice, is not that material. One thing I want to look at is this dollar. And it's just now, on the MACD, it sure, to me, looks like it's getting ready to roll over. That's the 1 hour. On the 1 day, who knows? Looks like it might break out even further. But this 1 hour looks pretty overdone. And this whole thing looks pretty overdone to me. The big question is, you would ask yourself, if you think the dollar's going higher, and this was a stock you're looking at, would you buy it? My answer would be, no way am I buying that. So that's my answer to what's happening with the dollar. It's way overextended. If this was a chalk chart, nobody in their right mind would buy it with any hope of going up much further. And I think the market agrees with me. Now, when the market came up here and closed, I think it closed somewhere around here. I don't know, it was plus 35 or something like that, plus 34 cents. This is in the face of the dollar being up $1. I mean, it was up $1. And the S&P just ignored it and rallied. Now it's up another 22 cents. And the S&P and the US 30 are not reacting at all. What this tells me is the market believes, as I do, that this is overdone. It's well done, baked, super mature, overextended zipper rally, and when these break, they break hard. So, and it looks like it's getting ready to roll over. See this? So I expect this to be corrected reasonably, and I mean down here into this formation minimum, and that would push the markets up pretty good. We also have bonds coming down. Here's the trend line. Expect it to hit that. I do expect it to hit that. And that's largely what my long call is based on, that I think bonds are topped out for the moment, and we're going to see a resolution of this hourly. Who knows how far, but probably down somewhere around this trend line again. So, the Dow Jones, I believe this is the futures chart. Not sure. Yeah, it's a futures chart. And this is a 4-hour chart, and I want to look at the 1 hour. 1 hour is crossed and is up, but we're rolling over, so we might see the Dow pull back here. And wouldn't be surprised. So I may be negative in the morning if we get a gap down based on this, but I really feel that this dollar is topped out, and that by morning we may starting to see this actually roll over. So I'm holding my long positions. I didn't close today. We're also due for some sort of retest of this broken trend. And where's the 1 hour? That would be conducive to this, we're due for that. Whether it's going to happen now or later or not at all, and we're just going to go straight down because the dollar goes even more ballistic, who knows? But my money's with the market, and the market doesn't believe it. In other words, it's obvious that the market doesn't believe this, because the market is actually, at least the S&P, which is what I'm trading, is actually up at the same time this is happening. So you got to make your own decisions. I'm not a professional investment advisor. I'm just telling you about my positions and what I think. And I think it's really super risky to get into the market right now long. And I'm willing to take that risk. But, you might want to wait for some kind of confirmation. But if you wait for confirmation, all this stuff might start going up again. And then you miss the move. So you got to take the risk. You don't have to take the risk. I am willing to take the risk. You have to make the decision whether you may take the risk or not. This is Dow Jones Dave.